So Tesla, not the only company to put a bond sale on hold recently in the primary market. In the past week, the auto finance company, Omni and Affirm did the same thing. Let's talk more about the credit markets and what is happening in the primary market in particular. Bloomberg Sonali Basak joins us now. Sonali, Rilke just said that Tesla's putting its bond on hold until markets have calmed. Is there an expectation that the primary market is going to calm? I appreciate that it's pretty much stasis right now, but is there an expectation that things are going to calm down and we'll be able to have an easier pricing environment anytime soon?
And for what asset, right, Guy? You see what's happening with the ABS market. You had Tesla, you had Affirm, you had World Omni, like you had said. But if you look at the IG market, you do you have some major bond issuances coming back. Just look at that $30 billion offering from AT&T and Discovery's combined media business just last week, GlaxoSmithKline. My sources are really saying right now, Guy, Gina, that there is some demand and some ability to get big U.S. IG deals done. Europe is in a really hard place right now, but then if you go down to anything a lot riskier, high yield, ABS, leveraged loans, that's when things get a lot tougher.
What trigger would they be looking for to come to market then? What is it that they're looking for in terms of volatility or rates or signals that would make them feel more comfortable?
Well, one thing that's interesting with rates is you have to wonder if a lot of this is happening to get ahead of the rate rises when it comes to those large bond deals that we had just mentioned. But when you look at also the volatility that's in the market, that's really still what's spooking people. It's not the absolute prices. They just want prices to be stable so that no issuer or investor is leaving money on the table here. If you look back and see what is happening to the indices themselves, I want you guys to take a look at what's happening to the Bloomberg high yield index here. It has fallen off quite a bit. And a lot of the private equity players, Guy, you and I have talked to KKR, for example, see that as such a great buying opportunity here. So for a lot of people, it's the perfect time to enter, but they just can't do it when things are whipsawing.
Well, okay, so what kind of trades would they be putting on?
Well, the steep drop-off you're seeing in the index there, the reason I want to pull it up also is because there's a lot of people who are thinking this is the perfect time to go short certain bonds, to go short certain markets, let alone treasuries. So that's one major trade we're seeing out there. We're seeing some of the people with a higher risk tolerance say that distress and that both in the sovereign area, by the way, that is sold off with kind of the rest of what's happening in EM, as well as what's seeing in corporates. The spreads are going to come back in at some point, but they're wide enough now to get into. But again, it is only for those with not the faint of heart, right? It is the people who are able to get in, but a lot of people here on the sidelines.
I know you've had a lot of conversations over the last week with investors in this space, as well as the issuers themselves. And it does seem to be more about volatility than anything else. How many people are starting to talk to you, though, about the broader impacts of Russia, Ukraine, and global risk and geopolitics, and maybe starting to say, okay, maybe the growth outlook isn't so good anymore?
Yeah, that's a huge part of things. There's a lot of credit investors in particular where stagflation is much more of a conversation than you're seeing for the equity investors, which are maybe not thinking about it as much, have a little bit more optimism. The credit investors are also worried about the margins and the eroding of the equity base here because they're saying there's just a little less cushion there than there was before. So, you know, a lot of people are talking about the divergence there. Actually, they're a lot more connected than you would think. But on geopolitics, that's why I had mentioned Europe as well. The U.S. is still such a big safe haven here when people are really worried about that growth slowdown in Europe more than they are in the U.S. So they do see it coming here as well.
Right.